Is the housing market teetering on the edge of chaos? All because of one man. Brace yourself. Donald J. Trump's return to the Oval Office could flip everything you know about real estate upside down. Imagine mortgage rates plunging to record lows, only to skyrocket without warning. What if your dream of homeownership becomes a financial nightmare overnight? Think you're safe? Think again. Secret tax reforms could flood your wallet, or could they drain it? Policies that seem like a win for your bank account might actually be a ticking time bomb for inflation, the silent killer of mortgage interest rates. Could Trump's tax cuts be the Trojan horse that unleashes skyrocketing prices, making homes even more unaffordable for millions? Drastic changes in immigration policies might seem unrelated to your mortgage, but they could be the catalyst that sends home prices spiraling out of control. Fewer workers could mean higher construction costs and slower home builds, tightening inventory on an already squeezed market. Is the housing shortage about to get a whole lot worse? And let's not forget about the elephant in the room, the potential release of Fannie Mae and Freddie Mac from government control or conservatorship. This move could shake the very foundation of home financing. Will it open the doors for more affordable options, or will it unleash a wave of instability that puts your home and investment at risk, just like back in 2007. You might think you're prepared, but the reality is most people have no idea what's coming. Are you ready to discover how Trump's policies could either catapult you into a new era of prosperity or slam the door shut on your American dream? The stakes have never been higher, and time is literally running out. He'll be in office in just a short period of time. Stay tuned as I expose what some of the truths, some of the pitfalls, and the unexpected opportunities that could redefine the housing market and your future. Because Donald Trump hasn't actually taken office yet, there's a lot of uncertainty about what will happen when he becomes the 47th president. But here's the thing. We've already had 4 years with Trump as our president. And before we dive into his new policies or policy proposals, let's revisit the significant policy changes from his first term that impacted the housing market. Understanding this past can give us a valuable clue into what's about to happen for our future as he becomes president. One of Trump's most significant policy was the Tax Cuts and Jobs Act, which lowered taxes for both individuals and businesses. The corporate tax rate dropped from 35% to 21%, and many individuals saw a doubling of their standard deduction. This stimulated the economy by increasing disposable income, benefiting consumer spending, and trickling into the housing market. But it wasn't all positive. The act also capped the mortgage interest deduction at $750,000 and limited state and local tax or the SALT deductions to just $10,000. This had a significant impact on high-cost states like California and New York, increasing the tax burden for many homeowners and effectively reducing one of the benefits of homeownership. For years, we talked about one of the benefits of being a tax deduction on mortgage interest as one of the benefits of homeownership. Well, that went away. Trump's deregulation efforts rolled back numerous regulations tied to the financial industry, environmental standards, and building codes. By scaling back parts of the Dodd-Frank Act, lending became easier for some financial institutions, potentially increasing borrowing accessibility and stimulating demand in the housing market. Immigration policies during the Trump's first term led to a stricter controls and increased deportations. While this aimed to address illegal immigration, it also has implications for the labor force, particularly in the sector like construction, because they rely on both skilled and unskilled labor. Trade policies and tariffs were also a hallmark of Trump's first term. By imposing tariffs on certain imports, the goal was to encourage companies to manufacture in the U.S. or onshoring. While this could protect domestic industries, it also risked increasing the cost of goods, including building materials, which could impact housing construction costs. Here are some of the positives. Lower taxes. Trump advocates for reducing taxes, which could increase disposable income and improve affordability for potential buyers. Number 2, deregulation. Reducing the red tape could lower construction costs and make lending more accessible, potentially boosting housing supply and demand. Number 3, increased housing options. Opening up federal land for development could address supply shortages and support new home construction. Number 4, infrastructure investment. Plans to invest in infrastructure could create jobs, strengthen local economies, and indirectly boost housing demand. Number 5, potential lower mortgage rates. Aiming to bring mortgage rates down could improve affordability and stimulate buyer interest. Number 6, removing Fannie and Freddie from conservatorship. This could open up the possibility of more mortgage options and, again, increased buyer demand. However, there are potential cons to consider. First of all, policy uncertainty. Changes in policies can create uncertainty in markets, which may lead to volatility in interest rates and housing demand. Number 2, inflationary pressures. Tax cuts and a booming economy could contribute to inflation, which again is the arch enemy of mortgage interest rates, potentially pushing them even higher. Labor shortages. Stricter immigration and deportation policies could reduce the labor force in construction, leading to slower housing development and higher labor costs. Number 4, higher construction costs. Tariffs on imported goods could increase the cost of building materials, making homes even more expensive to build. This one has many debating. Many or even most economists believe that the potential tariffs could cause the cost of the goods that are being tariffed to be increased by that exact amount. For example, if there's a 10% tariff on clothing, that cost would be directly passed on to the consumer. Yes, there's no doubt about it. This is possible, but what I actually think is more likely is that the foreign countries that are manufacturing or the foreign companies that are manufacturing the product will actually eat the majority of the cost and lower the cost to the U.S. consumer, so that way they don't see as a significant of an increase. Number 5, interest rate dilemma. Stimulating the economy while trying to lower interest rates presents a challenge. A strong economy often leads to higher interest rates, which could impact mortgage affordability. Number 6, removing Fannie and Freddie from conservatorship. It's the total opposite. Could it cause more turmoil in the mortgage market, more fraud, more instability, and ultimately make them less financially stable, which could crush the markets just like it did in 2007? All right, let's circle back to inflation, the arch enemy of mortgage interest rates. If the economy is booming due to tax cuts and increased spending, inflation could rise. The Federal Reserve might respond by keeping interest rates higher for longer to cool down the economy, which could negate efforts to lower mortgage interest rates. And if they're going to directly affect mortgage interest rates, they may have to start buying bonds or printing money again, which we all know is inflationary. Policies that stimulate economic growth can have unintended consequences in the housing market. Lower taxes and deregulation may boost the economy, but could also lead to inflationary pressures and higher mortgage rates affecting affordability, which we all know is a major issue in the U.S. right now. History has shown us that economic policies have a wide-reaching effect. The key is to learn from the past and make informed decisions about the future. While Trump's policies aim to stimulate growth, it's essential to consider how they may interact with the complex dynamics of the housing market. So, should you buy, sell, or wait? As always, the answer is never straightforward. It depends on multiple factors, including your financial situation, market conditions in your area, and your long-term plans. Staying informed and consulting with real estate and financial professionals can help you navigate these times. Navigating the housing market amid political and economic changes can be challenging, but knowledge, as always, is power. Trump's return to office could bring significant changes, both opportunities and challenges. If you found this analysis helpful, hit the like button. Make sure you do me a favor, subscribe, share it with others. Have a great day. This, again, was another guaranteed episode. We'll see you on the next episode and see how politics and policies affect your financial future. Thanks for watching.